Good afternoon, everyone. This is Financial Literacy 101. And as is promised, within 2 hours, we're going to get into a detailed talk about Bitcoin. I think it's very important that we have to talk about Bitcoin. I know there's a lot of financial people out there in the space are really diving into Bitcoin, trying to explain it the best way they can. But I think one of the most reluctant entities of Bitcoin that people are not talking about is the taxes. Most of us look at Bitcoin as a financial vehicle that can't be taxed or won't be taxed. But on the contrary, it will be taxed. Now, for right now, Bitcoin is a safe haven for people who simply just want to buy Bitcoin because there are no taxes that are being incurred in Bitcoin. But nonetheless, let's get into the conversation. Let's deconstruct what Bitcoin is all about and plus those taxes. Well, thank you guys for joining me this morning. I'm glad to see everybody here. Good afternoon, learning every day. I love that guy's tag name, learning every day. I absolutely love it. So let's get into it. So in the modern age, minted currencies often take the form of paper money, right? Like the American dollar, which does not have the same intrinsic value as coins made from precious metals like gold, silver, platinum, palladium, copper, etc. Perhaps even more likely, though, individuals utilize electronic currencies and payment methods, virtual currency, currencies, digital money. Some types of currencies rely on the fact that they are representative, meaning that each coin or note, okay, because we understand on the American dollar, they call it a note, can be directly exchanged for a specified amount of a commodity, except global currencies, aka fiat. We're going to get into it. Now, as countries left the gold standard, and we're talking about American and the Western European powers, they left the gold standard, especially back in 1971 when Nixon changed the commodity from gold to fiat, to debt, which is absolutely genius for the time being because it made a lot more white people more money. And granted, if Afrocentric people will learn how the system works, regardless if you are discriminated upon, racially profiled, guess what? You too can be a millionaire. We have to know what they know. We have to learn what they learn. But of course, education in today's school system, it's fraudulent. They don't even tell you about money. And that's the number one thing you're going to be dealing about with money. I digress. Now, we understand that we left the gold standard in effort to curb concerns about runs on federal gold supplies, meaning global currencies are now classified as fiat. And when I use the word fiat, ladies and gentlemen, just replace that with debt. Debt is fiat, fiat is debt. Fiat currency is issued by a government and not backed by any commodity. Understand, around the world, the global currencies were backed by gold, backed by silver, backed by precious metal. In some cases, before the turn of the modern society, backed by cows, backed by goats, backed by plots and slots of land. Now, but rather by the faith that individuals and governments have that parties will accept that currency. So it has to be tangible in a sense. Now, today, most major global currencies are fiat. Many governments and societies have found that fiat currency is the most durable and least likely to be susceptible to deterioration or loss of value over time. And when we really look at this, ladies and gentlemen, successful currencies have 6 key attributes. Again, successful currencies have 6 key attributes, characteristics, right? Scarcity, divisibility, utility, transportability, durability, and counterfeitability. Okay, a lot of abilities in there, but we're going to try to break these down as best as we can. Okay. Because essentially we want to look at why currencies actually have value, because currencies is usable if it's a store of value. But rather than require individuals to carry around, as I said this morning, cumbersome quantities of different commodities, no one's walking around to your house and say, hey, man, let me get this Toyota Camry for these 6 goats. We're not doing that today. Instead, those 6 characteristics that falls into what makes up a currency, number 1 is scarcity. See, the key to the maintenance of a currency's value is its supply. The reason why the fiat system have worked for America and most in the Western world, and they essentially have duped countries like Africa, the Caribbean, and even some case Asian countries, because they can just print their own money based upon debt and not based upon a commodity, not based upon oil, not based upon gold, not based upon cows and goats, etc. A money supply that is too large could cause prices of goods to spike, resulting in economic collapse. A money supply that is too small can also cause economic problems. Now we understand in monetarism is the macroeconomics concept which aims to address the role of the money supply in the health and growth in an economy. Now, in the cases of fiat currency, debt currency, as we said, most governments around the world continue to print money as a means of controlling scarcity. Many governments operate with a present amount of inflation, and we also got into deflation this morning, which serves to drive the value of the fiat currency down. Now, in order to combat deflation, believe it or not, they just print more money. That's all they do. To combat deflation, they send you out your stimmies, thus driving the economy of consumerism. Then they can hike back up inflation. But now, the value of the fiat currency in the US, for instance, this rate has historically hovered around 2%. That has kind of been the median of the inflation rate in America. This is different from Bitcoin, which has a flexibility insurance rate that changes over time, and it's global. Now, when we talk about divisibility, successful currency are divisible into smaller incremental units in order for a single currency system to function as a medium of exchange across all types of goods and values within an economy. It must have the flexibility associated with the divisibility. The currency must be sufficiently divisible so as to accurately reflect the value of every good or service available throughout the economy. Utility. We understand what utility is. I mean, a currency must have utility in order to be effective. Individuals must be able to rely and trade units of the currency for goods and services. And ladies and gentlemen, you go out to buy furniture, food, etc. That's all that's saying, right? This is a primary reason why currencies develop in the first place, so that participants, you and I, in a market could avoid having to barter, that means bargain and exchange directly for goods, directly for consumers. Utility also requires that currencies be easily moved from one location to another. Now, burdensome precious metals and commodities don't easily meet this criteria. It doesn't easily meet this stipulation, because think about old ancient time. People was walking around with coins. Just think about how much money you walk around with your debit card. 500, 1,000, 200,000, 300,000. Now picture you walking around with coins. That's not sustainable, especially in a global economy that we have now with modern day technology, right? People, essentially their wealth was built in their land. Their wealth was built in their cows and goats and all other sorts of commodity that they may have. But that's burdensome. And that's why we change the system. Now, the fourth one is transportability. Transportability. Currencies must be easily transferred between participants, you and I, in an economy in order to be useful. Now, in fiat currency terms, that's debt. This means that units of currency must be transferable within a particular country's economy, as well as between nations via exchange. We're talking about virtual currency, virtual money, digital money, cryptocurrencies, et cetera, et cetera, et cetera. Next, durability. To be effective, a currency must be at least reasonably durable. Coins or notes made out of materials that can easily be mutilated, damaged, or destroyed, or which degrade over time to the point of being unusable are not sufficient. Thus, I still don't understand why it went to paper, because paper can be easily damaged. We understand many of us have been in the water of some sort with dollars, $50 in our pocket. And if you did anything else than lay that dollar bill out, then it tore up and then you had no money. That money is gone. So durability. When it comes to cryptocurrencies and Bitcoin, it's very durable. Excuse me. It's very, very doable. The next, counterfeitability. Counterfeitability, yes. Just as a currency must be durable, it must be also difficult to counterfeit in order to remain effective. If not, malicious and let's just say bad parties could easily disrupt the currency system by flooding it with what? Fake bills. I mean, this used to be a huge thing between the 50s and 80s of counterfeit bills. I mean, even today, unfortunately, our brother George Floyd supposedly died, and this hasn't been proven yet, that he used a counterfeit $20 bill. Money plays a role in almost any aspect of your life, ladies and gentlemen. So brothers and sisters, thereby negatively impacting the currency's value when you counterfeit. Okay? Because again, it goes back to the number one rule, scarcity. So when the U.S. Mint, the Federal Reserve Bank, they know how much money is being printed. Then they have a record of how much money is being burned and destroyed, right? Because they're phasing out money, making new encryptions in the money, different colors, different watermarks, etc., to make it less counterfeitability. So people can't counterfeit the money. But when it comes to Bitcoin, to assess Bitcoin's value as a currency, we'll compare it against a fiat currency in each of the above categories. As I said, scarcity, divisibility, utility, transferability, durability, and counterfeitability. I know it's a lot, but I gave you a snippet of each what of those mean. But when we enact Bitcoin into those, we have to go back to 2009 when Bitcoin was launched. And now it's stipulated in the Bitcoin protocols that the supply of tokens will be capped at 21 million. That's right. There's only 21 million Bitcoins. So to give some context, the current supply of Bitcoin is around 18 million current day. The rate at which Bitcoin is released decreased by half, roughly every 4 years, and the supply should get past 19 million in the year 2022. This assumes that the protocol of 21 million would not be changed. Now, so far, the continued availability of more tokens to be generated has encouraged a robust mining community, meaning those people who are using their laptops and desktops to essentially use their computer-generated power to mine for more Bitcoins. I know, we won't get into Bitcoin mining. That's a bit much. Even so, though this is liable to change significantly as the amount of 21 million coins is approached. What exactly will happen at the time is difficult to say. No one really knows. I mean, an analogy would be to imagine that the U.S. government suddenly ceased to produce any new bills. But fortunately, the last Bitcoin is not scheduled to be mined until around the year 2140. Generally, scarcity can drive value higher. This is why all these Bitcoin investors and Bitcoin millionaires and billionaires are saying that this year, Bitcoin has essentially the propensity to reach $100,000 per coin. So right now, if Bitcoin is $56,700 at my current rate, at the current point that I looked at, even if you got in with a small amount of money, just think about it. It can double within this year. It can double within this year of 2021. But we have to look at Bitcoin because of the scarcity. You can look at this just like a precious metal like gold, because there's a limit. That's what makes currency valuable. It's the scarcity. Then we look into the divisibility of it. 21 million Bitcoins are vastly smaller than the circulation of most fiat currency, debt currencies in the world. Now, fortunately, Bitcoin is divisible up to 8 decimal points. The smallest unit equal to 0.000000001 Bitcoin is called a Satoshi, after the developer behind the cryptocurrency. Now, this allows for quadrillions of individual units of Satoshis to be distributed throughout a global economy. Now, one Bitcoin has a much larger degree of divisibility through US as well as most other fiat currencies. Now, while the US can be divided into cents, one of 100, $1, one Satoshi is just one of 100 million of one Bitcoin. And it's the extreme divisibility that makes Bitcoin scarcity possible. If Bitcoin continues to gain in price over time, users with tiny fractions, listen to this, this is very important, very, very important. Bitcoin continues to gain in price over time, as we have seen. A lot of us are beating ourselves in the head when Bitcoin was around $45,000 in early March. Now, with that being said, users with tiny fractions of a single Bitcoin can still take part in everyday transactions without any divisibility. A price of, say, 1 million for one Bitcoin would prevent the currency being used for most transactions. That's just, I mean, come on. You gotta, if you say you gotta deal in whole Bitcoins, that means that everybody who's dealing in Bitcoin has to have an entire Bitcoin. That simply just won't work. Now, one of the biggest selling points of Bitcoin has been its use of blockchain technology, which is essentially, it's a security blanket, it's an encryption. Blockchain is a distributed ledger system, as I said before, is a ledger, is a record, and is a system that is decentralized and trustless, meaning that nobody participating in the Bitcoin market needs to establish trust in one another in order for the system to work properly. It makes me kind of think of like Cash App and Zelle and Venmo and PayPal, where you may be paying someone for a particular service or a good, and you don't have that service or good yet. Bitcoin is a trustless system. This is possible thanks to an elaborate system of checks and verification, which is central to the maintenance of the ledger and to the mining of new Bitcoins. I mean, best of all, the flexibility of blockchain technology means that it has utility outside of the cryptocurrency space as well. Now, I tell people, if you're not too sure about Bitcoin, then definitely do your research on blockchain and blockchain technology, because we're looking at companies like Cisco, Microsoft, IBM. They are all integrating blockchain technology into their computer software systems. Now, the ability to transport. Now, thanks to cryptocurrency exchanges wallets, like one of the ones I've been promoting, I'm not attached or affiliated with them, but I believe that their IPO will be profitable, as Coinbase. Now, Bitcoin is transferable. Bitcoin is transferable between two people, two parties, however you want to look at it, within minutes, regardless of the size of the transaction, with very low costs. That has been a big push. Very low cost, very low cost. Instead of someone always taking 1%, 2%, 3% of your money, we're talking about very minuscule amounts, like pennies on a dollar, if not fractions of a pennies of a dollar to be more accurate. The process of transferring money in the current system can take days at a time and have fees. Think about this. When the last time that you bought a service or a good from an organization, right? On one end, they got the money instantaneously. You could pay for something, they refresh their screen, they say, yeah, we have your payment, sir, thank you, correct? But when something illegitimate happens, when something fraudulent happens, what occurs? You call in, you want your refund, you tell them about the situation, they say, yes, sir, your money will be returned to you within 3 to 5 business days. And in some cases, you hear about 2 weeks, right? The 2-week thing, the reason why those things takes a very long time because they have to go through different echelons of business within the organization, then they have to get it approved, and then they can refund your money, and then that's another 5 days. Have you noticed that? It takes a very long time when the money is being refunded or sent back to you. It takes forever. But when you spend that money, whether it be credit, debit, or cash, it's instantaneous. You got to love it. But when it comes to Bitcoin, and it being transferable, it is hugely important aspect of this particular currency and of any currency for that matter, of it being transferable. Now, while it takes vast amounts of electricity to mine Bitcoin, and that's why you have all these people out here Bitcoin mining, trying to get pieces of Bitcoin where they're just using computer power and they're doing it what? Absolutely free. The only thing you need is a very powerful computer, but you can get into Bitcoin mining. If you guys are gamers, I'm pretty sure a lot of you have powerful computers and you might want to look into Bitcoin mining. You get free Bitcoin essentially, and then, that turns into real hardcore cash, which, as I said before, I didn't want to get into the 18 platform that essentially the IMF, the International Monetary Fund, along with the Federal Reserve is coming out with this 18 platform to essentially reset the global economy. That's a whole nother video. But I digress on that. But anyway, it takes tons. That's where I was at. It takes tons and tons of electricity to mine Bitcoin, and also to maintain the blockchain and process digital transactions. Now, individuals do not typically hold any physical representation of Bitcoin in this process. Let me say that again. Bitcoin is not physical. There you go. Bitcoin is not physical. It's only digital. It's kind of like those NFTs that people are now ranting and raving about that. And NFT simply means non-fungible tokens, right? It's digital assets like art, contracts. It could be, here's the thing about NFTs, guys, not to get off topic. NFTs can be anything digital. If you design a vehicle, right? You design a one in a lifetime, unique, one of a kind vehicle on the computer, you can convert that into an NFT, and then you can sell it on a platform for millions of dollars, right? You created something that's one of a kind, but it's digital. That's all that is. Like they're selling they're selling electronic paintings as NFTs, and people are making millions of dollars off of it. It's not even tangible. The world is crazy right now with money. If you're not in the money game, then you're not making money. There's so many stupid, crazy ways to make money. You can go traditional or you can go futuristic. Now, durability when it comes to Bitcoin. Now, when we talk about durability, it is a major issue for fiat currencies in the physical form. I mean, we're talking about your dollar bills, that's fiat. You're talking about your euros, that's fiat. Your Canadian dollars, that's fiat. Your Jamaican dollars, that's fiat. Because we understand that Jamaica, unfortunately, resides under the UK, most likely under the Queen. I did a video on that. I won't get into that today. But see, a dollar bill, while sturdy, can still be what? Torn into smithereens. It can be burned. Okay? but otherwise rendered unusable. When you do that, like you cut up $1, some people try to tape it together, it's unusable at some point. But digital forms of payments are not susceptible to these physical harms in any way. Now, for this reason, Bitcoin is tremendously valuable. As I've been telling you guys on this platform for a long time, invest in Bitcoin. I remember just coming off a vacation the other day. We was with a group of people that we teamed up with just to have a good time, basically. And I was informing one of the ladies in the group that you should invest in Bitcoin. And she said, I know nothing about Bitcoin. I said, just invest. And it's hard for me to tell people not to invest without the education and informing them behind it. But you went on vacation. I didn't want to get too heavy into financial talk because I do it here. But nonetheless, I say, hey, just invest. Believe me, you'll get the information. She subscribed to my channel. Hopefully she's even listening now, or she'll listen later. I know this is going to be a long video, but stay with me. I promise you'll learn something. Okay. So anyway, now Bitcoin is tremendously valuable because of its durability. It cannot be destroyed in the same way that a dollar bill can be destroyed. However, Bitcoin cannot be lost. If a user loses his or her cryptographic key, the Bitcoin in the corresponding wallet may be effectively unusable on a permanent basis. However, the Bitcoin itself will not be destroyed and will continue to exist in records on the blockchain. So eventually, if it's records on a blockchain, you can eventually track down your money. You may not have access to it, but you can track it down. Counterfeitability. Now, thanks to complicated, decentralized blockchain ledger systems, okay, so basically non-governmental ledgers or records, Bitcoin is incredibly difficult to counterfeit. Doing so would essentially require confusing all people, all participants in the Bitcoin network at no small fee. The only way that one would be able to create a counterfeit Bitcoin would be by executing what is known as a double spend. This refers to a situation in which a user spends or transfers the same Bitcoin in two or more separate settings, effectively creating a duplicate record. While this is not a problem with a fiat currency note, it is impossible to spend the same dollar bill in two or more separate transactions. It is theoretically possible with digital currencies. Because, I mean, you can make a copy and have the same encryption coding, and thus it's the simultaneously look like the originals, kind of like what they used to do back in the 50s through the 80s of counterfeiting money. And even so, probably younger than that. Now, what makes a double spending unlikely? I mean, though it's the size of the Bitcoin network, a so-called 51% attack in which a group of miners theoretically control more than half of all network power would be necessary. By controlling a majority of all network power, this group could dominate the remainder of the network to falsify records and also different ledgers. Now, however, such an attack on Bitcoin would require an overwhelming amount of effort, money, and computing power, thereby rendering the possibility extremely unlikely. I mean, because at the end of the day, ladies and gentlemen, brothers and sisters, anything could be counterfeited. I mean, come on, pictures, paintings. I mean, anything could be counterfeited. I mean, when you really want to think about it, the first original model of an HP ZenBook. I mean, I don't even know. No, let's say an Asus ZenBook, which is a laptop. The original is the original, and everything else is a carbon copy, but essentially it's all counterfeit. But some people may argue that, hey, it's a real thing because it's made by a real company, but it's not fake. Okay, whatever. You get what I'm getting at, right? Now, with that said, generally, Bitcoin holds up fairly well in the above categories that I just went over when compared against debt currencies. That's debt currency. So one of the biggest issues is Bitcoin's status as a store of value. Bitcoin's utility as a store of value is dependent on its utility as a medium of exchange. We base this in turn on the assumption that for something to be used as a store of value, it needs to have some intrinsic value. And if Bitcoin does not achieve success as a medium of exchange, it will have no practical utility and thus no intrinsic value and won't be appealing as a store of value. See, like debt currencies, aka fiat, Bitcoin is not backed by any physical commodity or precious metal. Throughout much of the history, the current value of Bitcoin has been driven primarily by speculative interests. That's it. More people who are interested in Bitcoin, it goes up. Less people who are interested in Bitcoin, it goes down. Bitcoin has exhibited characteristics of a bubble with drastic price run-ups and a craze of media attention. I mean, everybody, social media, mass media, Black media, you name it, it's all over media. This is likely to decline as Bitcoin continues to see greater mainstream adoption. People just catching on to Bitcoin, like, yeah, I'm gonna invest in Bitcoin. Do you know anything about Bitcoin? No, but I know that it's going up. Okay, I'm gonna invest in it. But come on, the future is uncertain in this particular space. Bitcoin's utility and transferability are challenged by difficulties surrounding the cryptocurrency storage and exchange spaces. I mean, in recent years, digital currencies exchanges have been plagued by hacks, thefts, and frauds. Think about this. You ever put your credit card information or bank information on an investment website, on a Amazon, what's the other ones out there? Wayfair, any website that allows you to store your information on your credit card information, because you can go in there and you buy different sorts of items and goods. Right? I have been hacked through even Amazon. Okay, not Amazon hacking me, but my financial information was listed on Amazon and someone took out $200, okay, off my credit card. Now, Amazon, I called up Amazon, they refunded me the money, but nonetheless, I was hacked. So this is nothing new. Now, of course, thefts also occur in the fiat currency. In this particular world, it occurs. So in those cases, however, regulation is much more settled, providing somewhat more straightforward means of redress. Bitcoin and other cryptocurrencies more broadly are still viewed as more of the unknown, aka the Wild Wild West. Woo, the Wild Wild West. I mean, this is a setting when it comes to regulation. I mean, different governments view Bitcoin in dramatically different ways, and the repercussions for Bitcoin's adoption as a global currency are significant. Here's one. When we talk about Bitcoin worth versus the rival fiat currencies, aka the American dollar, aka the euro, aka the pound, okay, those Western European monies. In order to place a value on Bitcoin, we need to project what market penetration it will achieve in each part of each financial market. We have to look at it. If we pick an arbitrary value of 15%, both for Bitcoin as a currency and Bitcoin as a store of value, you are encouraged to form your own opinion for this projection, adjust the valuation accordingly. The simplest way to approach the model will be to look at the current worldwide value of all mediums of exchange and all stores of value comparable to Bitcoin, and then calculate the value of Bitcoin's projected percentage. The predominant medium of exchange is government-backed money. And for this particular model, we will focus solely on them. Now, I can get into the M1 or the MOs, but I'm not. I think most importantly now is for us to switch the conversation to taxes. Now, thank you, Learning Every Day, for moderating. I see Vlad here. Good morning. Thank you, Vlad, for saying it's a great video. But I told people, this is going to be a lengthy video, and I'm going to the second part of the video right now. We're going to start talking about taxes when it comes to Bitcoin, because we understand that Bitcoin is a hot commodity. Trading in Bitcoin is rampant. We have Bitcoin millionaires. We have Bitcoin billionaires. And again, I said this earlier, companies like Tesla are allowing customers to buy their product using Bitcoin. And credit card companies, listen to this, credit card companies like Visa are looking at having Bitcoin specific credit cards that can be paid off with Bitcoin. The two biggest challenges that remain in Bitcoin becoming mainstream are its volatility and its taxation. Now, we understand that Bitcoin is a virtual, digital, crypto that never sleeps. It's always trading and it's always up and down. It's up 61,000. It's down 56,000. It's up 58,000. It's down 57,000. But the track record, what seems to be that Bitcoin is live. Let me share my screen with you guys really quickly. Let me share this, guys, with you. Give me 1 second. I believe that visual representation while you're teaching is always a good thing. So as we're looking at Bitcoin live here, and that listen, this happens all day, every day. What you see is that the market is now live. Let me make it even more volatile because that's the last 5 years. Let me go right to live. And this is Bitcoin live. This is Bitcoin live right before your eyes, ladies and gentlemen. This is Bitcoin live right there. You see down there, it says live. And Bitcoin, the way you're looking at Bitcoin right now, this occurs every millisecond of every day since its inception. Since its inception, this is what it's been doing. Now, as I have you guys mesmerized by the Bitcoin going up and down, I think it's time to really talk about Bitcoin. And one of the things that none of us like, taxes. Because now we know, again, the two biggest things is the volatility and the taxation. But volatility is likely to ebb as Wall Street creates Bitcoin ETFs and big players start shorting it. That's what's going to happen. People going to start to short Bitcoin. It's going to get stupid here. But you should really get in on it early. That way you have a significant amount of Bitcoin. And I tell people, don't look at this Bitcoin price and be scared. Don't look at this Bitcoin price and be intimidated. Invest your $5, $10, $15, $25 a month and continue to invest, and your investments will turn profit. But now, taxation is an entirely different issue. I mean, many people talk about the benefits of Bitcoin being outside the system. While it is for now outside the banking system, it is far from being outside the tax system. The IRS treats Bitcoin and other cryptocurrencies like Ethereum as a commodity. Listen to that. They treat it as a commodity. So the question is, how Bitcoin is taxed? Now, under the tax law, commodities are simple property. Again, commodities are simply properties. Now, if you sell a commodity, you pay tax on the difference between your purchaser's price and your sales price. That's where you pay your tax. The difference between your purchase price and your sales price. That's where the tax actually is incurred. If you hold the commodity for investment, listen to this. This is for anything. Think about it. If you hold the commodity for investment and for more than 12 months, that's 1 year, you are taxed at long-term capital gains rate. If you hold the commodity for investment and sell it sooner than a year, sell it sooner than 12 months after you purchased it, you are taxed at short-term capital gains rates, which in the US are taxed at the same rate as ordinary income, meaning you're going to be taxed at a very high rate. Take, for instance, if you are a dealer in the commodity, meaning that you maintain an inventory and have customers from whom you buy and sell the commodity. And again, ladies and gentlemen, commodity can be oil, it can be precious metals, it can be cows for all we're thinking about, right? Commodities, mostly tangible things. The commodity is treated as an inventory and the income is treated as an ordinary income. This is all good and fine if you are a dealer or a mere investor like moi, like myself. But what happens when you trade the commodity, aka Bitcoin, for a different product such as a Tesla, okay, Bitcoin, we're looking at Bitcoin as a commodity. This is how the US is taxing Bitcoin. But when you use that Bitcoin For a different product, such as a Tesla, under the IRS code, you are taxed anytime you sell or exchange one asset for another. Bitcoin is an asset, and the Tesla you acquire with the Bitcoin is another asset. Now, let's focus on the term exchange. Many people wrongfully assume that since you are not selling the Bitcoin, there is no taxable transaction. An exchange also creates a taxable transaction. So take, for instance, if there is a trade of a cow for a horse, you have a taxable exchange by both the cow owner and the horse owner. Similarly, when you exchange your Bitcoin for a Tesla, there is a taxable transaction to the person exchanging the Bitcoin, you, and the person selling the car, Tesla. Your tax is based on the difference between the price you paid for the Bitcoin and the value of the car. Tesla tax is based on the difference between the cost of the manufacturing the car and the value of the Bitcoin received. Taxation is the real obstacle for Bitcoin becoming really used by the public, you and I. Every time you spend Bitcoin, you have a taxable transaction. Suppose you were to have a credit card that was satisfied with Bitcoin, meaning that you can pay off your Bitcoin with Bitcoin. Think about that. You have a Visa specified Bitcoin credit card and you pay it off with Bitcoin. But think about it. That's what you're doing anyway. Think about it. That is what you're doing anyway. We understand that the American dollar is fiat, right? We understand that the American dollar is fiat. And when you use a credit card, it's using credit. Credit is debt. Debt is fiat. Fiat is debt. Debt is credit. Are we staying together, ladies and gentlemen? Boys and girls, brothers and sisters from around the world, are we staying together what this is doing? Hopefully, I'm breaking it down into a manner that we all can understand. Okay? Now, suppose you were to have a credit card that was satisfied with Bitcoin. Every purchase you make will be a taxable event and will have to be reported on your tax return. Credit card companies are already required to track sales and report those sales to the government via Form 1099. I've been telling you guys about the 1099, whether it be the DIV, the 1099 MSIC, miscellaneous. Now, presumably, they will also be required to track purchases when they issue Bitcoin credit cards. Oh, yeah. The federal government will find a way to get their money, but guess where the federal government don't get their money from when it comes to taxes? The rich. Because you know why? Some of us may say, oh, it's not fair that Donald Trump and other rich people don't pay taxes. Ladies and gentlemen, the loopholes, the gray areas in the U.S. tax code is public knowledge. The problem, and what the federal government knows, that majority of people, 8 out of 10 people, do not like to read, let alone do not like to research. They want all of their information fast, in a hurry, quick, right now. You will go to a sit-down restaurant and still want your food in 5 to 10 minutes. Some of you may wait even 15 minutes. What's taking the food so long? Well, we got to cook it, sir. Oh, that's right. Yeah, you do got to cook it. That's the problem. But see, the question is, will they track your costs? I mean, in some instances, it's called basis in the tax law, but probably not. They probably won't track your costs. They won't know your costs. So you will have to track that and report it on your tax return. I told people this in an earlier video, that because of the pandemic, because of the federal government is doing the one thing they hate to do. They hate to do it, ladies and gentlemen. They absolutely hate to do it. They hate to give you money. The federal government loves to take money, but they don't like to give it. because they're going to tell you, oh, we're doing it for international commerce. We're doing it for international infrastructures and a federal regulated high-speed rail, and that we haven't seen yet. The only person who's making way on new forms and modes of transportation is Tesla and Elon Musk, okay, with the whole pod system and the Hyperloop system. But I digress. The credit card companies will be reporting your transaction to the IRS. Did you hear me? Oh, yeah. You know that Capital One card you love so much? You know that Navy credit card you love so much? You know that Wells Fargo debit card you love so much? With the Visa logo on it, with the MasterCard logo on it. They will be reporting your transactions to the IRS. So the IRS will want to match those with your report on transactions. Now, they will report this on your tax return. This is already the law. People don't even know it. It's already the law when it comes to Bitcoin and other cryptocurrencies. There just aren't a lot of people using Bitcoin for everyday transactions, so this hasn't really hit the news yet. I mean, the IRS does require you to answer a question on your tax return regarding cryptocurrency. Regarding cryptocurrency transactions. The question that I saw on TurboTax that I went over with my tax professional, at any time during the tax year, did you receive, sell, send, exchange, or otherwise acquire financial interest in any, listen to this, virtual currency? Can I say that again? Can I say that one more time? I want to make sure everybody is listening to this because it's very, very important. Very, very important. The IRS asks you a question while you're filing your taxes. And the question is simple. At any time during this tax year, did you receive, sell, send, or exchange, or otherwise acquire financial interest in any virtual currency? And what we need to understand was the most important part of this whole entire video, other than the taxes, the volatility. If you fail to answer this question correctly, it is considered as a felony and you can go to jail. We understand that all the other crimes dealing with finances, if it's not purposely intended, is a civil matter. You really don't serve any time. But when it comes to this one particular question and you're trying to be fraudulent in your tax return, you're trying to hide Bitcoin, digital currency, virtual currency, etc., it's a felony. That is what it is, ladies and gentlemen. So you're asking, well, what could you do? If you are just holding on Bitcoin or other forms of cryptocurrency for investment, you may want to consider owning it in an IRA or 401k or other qualified retirement plans. This is the one time when you have a QRP, or also known as a qualified retirement plan. This is the one time when a QRP makes sense, especially if it is in a Roth IRA or Roth 401k. You can buy and sell Bitcoin to your heart's delight within a Roth and never be taxed on it, because we understand that Roth accounts of any form are pre-tax, meaning they take the money off the top. So once you're, it's kind of like getting in a club, right? They give you a stamp. You're walking through the club, you pay your money to get into the club, they give you a stamp. You can party all you want inside the club, okay? But in some cases, you got the cheap club. They say, hey, you can't re-enter unless you pay again. But I digress. Now, what you can't do is use it for personal purposes. You can't use it once it's in a 401k Roth or a Roth IRA. You can't use it for personal use, like buy a Tesla. This would also avoid the requirement to answer the question on the tax return about Bitcoin, since the IRA 401k would be the owner and not you. You see what you just did? You legally hid Bitcoin. What I've noticed is that millionaires and billionaires, the reason why they stay that way, the ones who use the federal government as a tool to stay rich. They use fiat, they use debt to stay rich. Now, a lot of you, like myself, I've listened to Dave Ramsey, and that, believe it or not, most people can't do that. But most people can actually turn your debt into millions. You can turn your debt into hundreds of thousands of dollars. Am I in the process of doing that? Hell yes, to say the least. But nonetheless, we have to really understand what we're doing and how to go about it. And I know this video, like I told you guys before, is very lengthy, but I know majority of people are not going to even listen to all of it. But I think it's very profitable that people do, because this is information that I've been gathering, researching, putting together, so we understand what we're getting ourselves into. Because if you really want to make more money, if you really want to have a free financial life, then you have to learn how money is being used, how money is being exchanged, how money is being invested, how money is being legally being used legally as a vehicle to incur debt so you can incur more profits. I mean, it's as simple as that. Now, remember, Bitcoin has a lower tax rate than gold. Long-term capital gains on gold are taxed at 28%. Can I say that again? Long-term capital gains on gold are taxed at 28%, while cryptocurrency is taxed at the different bracket of 0%, 15%, and 20%. So long-term investments in cryptocurrency may be better off outside of a regular IRA or 401k. Roths are always good for long-term investments other than real estate, business, oil, and gas. That's it for the day, ladies and gentlemen. Hopefully you learned something that's tangible. Hopefully you could retain 5 or 10% of the information given. If not, just rewind the video, take some notes, and apply it to your everyday financial life. This is Financial Literacy 101. Thank you guys for joining me this morning, this afternoon. Learn money and be inspired. You guys have a great and wonderful day. And I'll see you guys on the next one. I'm out.